What's up, everybody? It's Mike, and this is the 3 to Thrive show where we give you 3 ways to improve your trading. And today we're talking about 3 ways that you can sell at a profit. This question comes up all the time. Mike, how can you sell a position better and lock in gains? Well, there's 3 ways that I like to do it. And the first way has to do with selling at multiples of what I've risked. Now, what in the heck does that mean? That means that let's say you're in a trade, right? Like let's say that you've got this chart and let's say that price was moving sideways and you bought right there on that breakout. That means that I'm entering right there and I would typically sell below resistance, right? So I would look to sell right there. So once I'm making that amount, right? So once price advances to say about there, I would be looking to take a little bit off the table. And the reason why is because I've made 1 times the amount that I've risked. When price advances to this level up here, right? Roughly 2 times what I've risked, right? Like I'm not the best artist in the world, but you get the idea. That would be where I would start to take a little bit more off the table. Why? Because I've made 2 times the amount that I've risked. Now, on every single trade that I make, I aim to make at least 3 times the amount that I've risked. If I don't see that there is at least 3 are potentially in that trade, then I'm not taking that trade. The reason why is because the more potential there is in a trade, then that means that you're building more failure into the system. That means that you could fail more often and still come out ahead. You're not relying on a high batting average in order to win. You could still win with a low batting average, and if you have a high batting average, fantastic. So aim for 3 to 1 and take profits along the way. Now, the next way that you would start to sell at a profit would be to use trailing stops. Now, there's a bunch of different trailing stops that you could use. For me personally, I like to use moving averages as trailing stops. And if I'm in a trade, let's say we've got a moving average. Let me use a different color. Let's use orange, right? My favorite. So let's say we've got this moving average there, and I'm using the close below that moving average as an exit. Great. So then that means that once the trade is profitable, what I would do is, let's say we've got the price action. Let's just pretend that that's a bar and that's a bar. And so let's say it closed over here, right? So it popped up, it dipped below the moving average, but it ultimately closed below it. To me, I'm still in that trade as far as the moving average is concerned. Then let's say it closes up here. Fantastic. Still in that trade as far as the moving averages go. And all this, again, just to reiterate, I'm selling in stages. So I'm selling bits and pieces along the way. I'm very rarely making an all-in decision. In fact, the only time that I would be completely out of the trade is on that stop loss. If price just reversed hard and I'm out. And that's the idea of cutting our losses, letting our winners run. But let's say on this bar, we've got a dip below, and let's say price closes right there, then I would be exiting a portion of the trade. The reason why is because moving averages help to gauge the momentum of a trade, and I'm a momentum-based swing trader. If price is starting to lose momentum and it's telling me that it's losing momentum by closing below the moving average, then I want to start scaling out of that position. Now, the third way that we could start to lock in profits would be to start to use backstops. Now, what in the heck is a backstop? A backstop is where price starts to form a floor, right? Like, so let's say price just runs up there. Now I've got to redraw all that, but anyway, let's say price starts to run and then it breaks out and then it comes back in. It should not fall below that level there because it made a support level right there. And if price comes back in, falls below it, then I want nothing more to do with that trade, and I would exit the remaining portions of my position at that point. And all that, it's all locking in profits along the way while allowing this particular trade to run for however long it's going to run. We have absolutely no idea what's going to happen after we make this first buy. And so it's important to have a target so that way you know if you should take the trade or not, you know how much you're risking, and then let's say this is Tesla, right? And your ultimate target, like for me, I was actually trading Tesla, and my ultimate target for it at the time was 1,000. It passed 1,000, but I wanted to continue to let it run. So I'm scaling out on the way up, and I'm holding on to the last bit of it, about a third of that trade after it's running past 1,000, and then I'm using these other mechanisms to allow that trade to continue to run, because I don't know if it's going to only 1,000, or if it's going to 1,200, 1,500, well, whatever, or if it's just going to run right back down and completely end. But I'm selling in stages up along the way to continue to capture that move. And that's how you too can capture the bulk of the move without giving back too much of your hard fought profit and continuously win in your trading. Now, I hope that this was useful for you. If it was, please drop a comment down below. Let me know if you enjoyed this or not. If you found it helpful, share it with somebody else. Give them the value too. And of course, if you have any questions at all, just drop them down in the comments below. I read all of them. I want to say thank you so much for watching this. I truly appreciate it, and I'll see you again in the next video. Take care. Peace out.